Hi everyone and welcome to Taiwan Talks, covering the latest global news and analysis from a Taiwan perspective. I'm Gladys Lee.
I'm Rath Wang. Coming up on our show today, the World Bank has revised its 2023 global growth outlook to 1.7% from its earlier projection of 3%. We look at the implications inflation and oversupply has had on slower growth in the world economy. Then, an update from one of Hong Kong's leading financial experts, Stephen Tong of Franklin Templeton Investments, on the investment outlook for 2023.
The strength of US dollar that we have seen in last year might be, easing towards, favoring a lot of the international or even the emerging equities. So that's why we see a lot of the interesting opportunity.
We will then discuss how Taiwanese financial markets are faring amid rising global inflation, amongst other uncertainties. World Economic Forum agenda contributor, global supply chain expert Alex Capri at the Heinrich Foundation on Taiwan's leading export, the semiconductor industry's key growth sector.
The real interesting and potentially lucrative, again, mid to long term area in semiconductors are specialized chips.
Lastly, we will discuss what are the potentially hot growing sectors of the semiconductor industry in Taiwan.
Welcome to the show. With China's unexpected opening up amid an explosion of COVID cases, the Russian invasion of Ukraine, and the Federal Reserve rising interest rates, the world economy is yet again on the brink of recession. Today on the show, joining us, we have two guests. First, we'd like to introduce you Mr. Peter Kurtz, Chief Strategy Officer at Quantum International. Also, he's well known as Mr. Taiwan. Peter is an expert in the region's financial markets and plays a key role in attracting foreign investors to Taiwan. And we have Marco Mesker with us today. He is the Executive Vice President and COO of Neomonda and President of Memphis Electronic. Both are experts on Taiwan's chip industry. A very warm welcome to both of you.
Thank you. Thank you, Gladys.
Taiwan Talks reporter Ken Ning spoke to Stephen Tong, Franklin Templeton Investments Vice President and Senior Client Portfolio Manager, a renowned financial analyst based in Hong Kong. I also spoke earlier to Alex Capri, Research Fellow at the Heinrich Foundation, who is also a World Economic Forum agenda contributor. Alex is an expert on chip supply chains, trade, and global governance. The U.S. Federal Reserve has predicted GDP will barely rise by 0.5% in 2023. However, over in Taiwan, the Directorate General of Budget Accounting and Statistics estimates that economic growth will hit 2.75%, with the central bank estimating 2.53%. Our first question goes to you, Peter. With this very modest growth prediction, and we've seen in the U.S. almost zero growth, what implications does this have on the overall economy?
Well, certainly the key driver to global economic growth is the United States, and Taiwan is still a very much an export-dependent economy. So to whatever extent we see any continued weakness in the U.S. economy, it's going to be hard for Taiwan to really pull away from that to any great extent. The real driver, in fact, to U.S. economic growth is in the hands of a very few number of people, and that's the U.S. government's budget drivers, because the U.S. budget deficit fell to almost 16% of GDP 2 years ago, and it has been pulling back now. That increase in the budget deficit of 16% is basically increasing GDP by 16%. In other words, it would have fallen that degree if it hadn't been for that spending. And to the extent we try to move away from this budget deficit spending, it's going to be a headwind for the U.S. economy and for the global economy as well.
What do you see in terms of Taiwan? Do you feel that we will also take the headwinds here?
Well, I think it's inevitable. My biggest concern, though, beyond that, is the weakness of other countries with very high debt levels in this high interest rate environment.
Such as Japan?
Japan, but Japan is able to self-fund a lot of it. It's mostly for those with large US dollar denominated debts, such as Greece, Spain, Argentina, and so forth. And if we see some wobbling among these countries, it may create some concerns. Now, in this respect, Taiwan is in very good position because it has very low foreign debt and very low domestic debt for that matter. And so we may see that 2.5, 2.7% come down a bit further, but I don't necessarily see Taiwan going into recession.
Yeah, as we talk about the recession from the U.S. economy, I traveled actually to Pacific Northwest of the States last month, and we can see from the tech company cut down of their recruit and everything. Do you see it as a sign? Actually, the question goes to both of you. Do you see it as a beginning of a huge recession of the global?
First, we need to see why they lay off people,
right?
right? Why they need to do this. And if you have seen during the last 2 years, they have been booming. They're expanding a lot. You know, money was there, was available. It was still cheap, right? So you could invest, you can lend the money, you could do acquisitions and build up new businesses. And you have seen a lot of these companies now, they are faced with the reality, right? It's the new normal. And so I think it's kind of, it was predictable, right? That it comes to this point that you have layoffs, that this is happening, you know, especially in a lot of the tech companies, which is going on there, right? So this is mainly software, what you are saying. But I think also in the semiconductor industry, which is basically like, let's say like hardware driven, like the chips, we also have seen this that the last 2 years there was a lot of shortages. Then now we are building a lot of fabs. And suddenly, with the combination of the economic downturn, there's too much supply for this, right? So there is always this kind of cyclics, right? Like a cyclical industry, but it just got magnified by all these external factors, including geopolitics and interaction with politics to business, right?
How about you, Peter? How do you see of this layoff of the people and then the relation with what Marco just said?
Well, again, following on Marco's comments, certainly it's been mostly in the software space. We've seen the very large layoffs, and these were companies that, again, were doing extremely well during the COVID period, and probably bulked up their employment, and therefore now, again, responding to that. We're also seeing it coming out of Wall Street to some extent as well. And again, that was a sector that benefited very much from COVID because of the strong bull market in almost all components. And so again, they are responding to what appears to be a slowdown coming forward in 2023. For a lot of these software engineers, I suspect there's going to be a lot of demand for them, and I'm not too concerned about it having a net impact or a significant net impact for the time being. Nevertheless, it's obviously going to have some negative impact.
Bring it back to Asia. We've seen layoffs in South Korea, the unemployment go up. How do you feel that reflects in terms of Taiwan being Taiwan's top, or you could say second competitor with Samsung versus TSMC? Do you feel that could have a ripple effect on Taiwan?
Well, there is, what we've seen over the past few years as well is this onshoring of production facilities from China, out of China, a lot of it coming to Taiwan, a lot of it going elsewhere as well. And so this has actually created a floor for this demand for workers more broadly, and factory space and industrial land too. Now, again, that may have come full course, and we might see some of that loosening up going forward. As Marco mentioned, we look at aggregate inventory levels, not just in the semiconductor space, but even more broadly, and they've come down a lot, but they're still at relatively high levels. And if there is a slowdown in the economy, they're starting from a much higher base than normally we see. And so I do see some risks there as well. So for now, I don't see any problem, but we have to obviously be vigilant.
It's great you mentioned inventory and oversupply, and this is for you, Marco. Being in the semiconductor industry, how do you see that pan out in 2023? Do you feel that there could be an balance, or do you feel that this will continue?
Well, I think what we see right now in the semiconductor industry is a typical bullwhip effect, right? So it's like you see like the end customer when he's basically not buying anymore, and this is going through the supply chain. The most hit is the company in the very beginning of this, right? From the planning. So as mentioned in the previous statement, the last 2 years was more like I need to get my hands on certain components. And as we discussed previously, we have a phenomenon in the semiconductor industry or the electronic industry called the golden screw. So this means, let's say you have all the products to manufacture, let's say an end product, but you're missing one part, and this part maybe is only $1. But because of the $1, you cannot ship, let's say, a $1 million machine.
And many of them are made in Taiwan.
Yes.
Yes. So I think this problem is still at the moment in some areas in the automotive industry, but it has much, much more improved. And in some area, it is real oversupply. For example, memory industry, which is accounting 30% of the semiconductor industry, we have a tremendous oversupply, and we are talking at the moment quarter over quarter, double-digit price reduction since Q3.
Okay.
So we're probably 45% down last year from the pricing, and we probably will go down another 10, 15%, right? They are almost like at kind of cost level. That's why in some industries you only have 3 more players, like Samsung, Micron, and SK Hynix, because you know the investment you need to do and to bear with these cycles is basically quite challenging.
Your
so overall, the semiconductor industry, it's predicted for this year to go down roughly around about 3%, 3.5%. Memory, which is 30% of it, is 16%, which is going down. So now the question is, how does this hit Taiwan? So for Taiwan, you need to see Taiwan is more on the higher end of kind of the value chain in the production. So I think when you look at TSMC, they own around about 60%, 55 to 60% of the global chip production or foundry market.
Okay.
And especially the most advanced nodes, the most challenging ones, are produced here. So everything what goes in data center, CPUs, high-end computing, NVIDIA, AMD, Apple producing at TSMC. So these are high-value components, right, which is basically used. And data center has been quite resilient, especially last year, to all the downturn. I think they will also probably be hit, I would guess, this year, because if, let's say, the end customers are getting less, then probably also the data center will slow down. And they are also playing the game with the inventory level to negotiate good pricing, right? Because they know that basically there's more supply, and they have extremely strong market power, right? So let's say in the memory space, they're accounting for around about 38 to 40% of the total revenue is only from these hyperscalers and cloud computing, like huge companies like Amazon, Microsoft, Google, Baidu. So these are all the big companies who are using this. And so there's a little bit, it's like the traditional buyer and seller, who has the benefit right now. At the moment, definitely the buyer, but the last 2 years, it was the seller.
Oh,
How much impact do you feel that this could have?
Yeah, how long would it expect to last?
Well, my prediction is I would say we should see a change by the second half of this year.
Okay.
The first half will be still pretty bloody. I'm not sure how you see this, Peter, but I definitely would say we haven't reached the bottom. So we slowed down with some of the reduction. And you still need to be very cautious because there are some pockets, like special, they are called microcontroller units, MCUs, FPGAs, like programmable processors. They are not in surplus. Okay. In fact, they are still in short supply, where you have maybe a lead time reduction from previously 50 weeks to maybe now 30 weeks, and they are going down. But originally, these parts pre-pandemic were much shorter lead times, maybe 8 weeks, 16 weeks, something like this. And then in the pandemic, they were going up to 50 weeks, 60 weeks, plus unknown. Oh, wow. So there were orders where basically you did not know when you get the parts. So it's on the discretion from the manufacturer to give you the parts. So we are coming from an extremely seller-orientated market, now switching to buyers, right? And what I've seen in the industry is that you cannot avoid these cycles. You can't. I think even with the most sophisticated supply chain prediction systems, so you always will have this. But I think buyers and sellers trying to find programs where they can level this a little bit, right? Where they cannot make it so extreme, right? So I think is a very interesting solution what Samsung is offering called memory as a service. So they are thinking about to rent or to offer the DRAM modules to these server or data center companies and then just generate like a regular revenue. So they are not so much depending on the fluctuality, right? They have maybe top line a little bit less, right? Because they get a less revenue. But these are new models which have evolved the last 2 years.
That sounds very interesting. Is your company also? Yeah. Wanted to ask if his company is actually, Marco, your company is applying this new model as well.
No, we are still traditionally designing in with engineers to design products. So we are mainly in the industrial market segment and specialty segment. But I think for companies like a Samsung, a Micron, for companies who dominate basically this memory market, there are interesting business models. And even Intel, they are thinking about to give a subscription model for make in the CPU certain areas available when you pay it after you buy it. So you need to imagine you buy a CPU or like a car, and then later you pay the manufacturer a certain fee. I think BMW wants to charge you a fee in the winter that you have the seat heater that you can use this. So they try these models. So the question is, would you accept it as a consumer? I'm not sure. So it's also a little bit how does the consumer accept this or say it's a
challenge?
Yes.
Yeah. Wow. It's good to hear from Marco your point of view. But I'm curious about Peter. How would you see this will last for how long? Would you see?
Well, again, I would echo what Marco said. I do expect the bulk of the weakness to be hitting in the first half of the year, and you may find that. With, ironically, some loosening up of the supply chain, you get greater order fulfillment, and then suddenly there's an oversupply of product on the market, prices go down, and when prices go down, buyers begin to pull back their orders. And so this is a dynamic that really hasn't kicked in yet. And there's another factor that many have been focusing on more recently, is that the opening of China in the aftermath of the reversal of the zero COVID policy, which of course is in the short term still creating this surge in infections there, but at some point they will begin to get back to work. There will be a recovery in the economy. Will that be beneficial to the global economy or not? Again, here I think it may not be as clear as it would seem at the surface, in that China still isn't a big consumer of global manufactured goods. They primarily import semiconductors to the extent that they are not subject to export controls now, and of course oil and other commodities. And so what we may see too in the early months of this year is that as China comes back online, oil prices begin to kick back in, and that will reignite inflation concerns and overall economic concerns as well. So I don't think we're quite out of the woods there either.
I see. So we're coming back to talk more on the financial markets. So we just talked about the global supply on the world economy, the region, and what this means for Taiwan's chip industry and, of course, the semiconductor industry. Coming up next, we'll be hearing from Stephen Tong of Franklin Templeton Investments, one of Hong Kong's leading financial experts, on the investment outlook for 2023.
Let's now hear from Stephen Tong, Franklin Templeton Investments Vice President and Senior Client Portfolio Manager, a renowned financial analyst based in Hong Kong. Taiwan Talks reporter Ken Ning spoke to him earlier about investment trends in the year of the rabbit and what sectors investors should be looking at. Let's take a look.
Inflation, uncertainty around the wars in Ukraine, and also Fed policy. For now, we still favor fixed income more than equity because of those macro headwinds. have we seen, the bottom? I think we are, even if we are not, we are quite close to that. And longer term, we are quite confident both equity and fixed income will do reasonably well given the drawdown that we have seen last year. But at the moment, we like, fixed income way more than equity because, the yield has been much more reasonable. Now you see U.S. Treasury are for 10 years trading around 3.7 to 4% yield, which we have not seen for more than a decade. It has, made these asset class way more attractive. And, for a lot of the securities that we own, we prefer, to be a fixed income owner rather than on the equity owner side. That makes us feel that, fixed income are a more attractive position to be in for this year.
Compared with the US and European economies that are yet to rebound, China's economy is expected to recover from its lowest point as zero COVID loosens up. With global inflation unabated, will the investment environment be attractive in 2023?
Few factors in play, right? Obviously, China has been reopening from COVID. You see there's a lot of activity. People are traveling, within the country, or more recently, people can travel out of the country. So we do see that is happening, and some of it has been reflected in the share price, right? You see A-share, or if you use the Hong Kong equity as a proxy, both have been rebounding quite strongly. So we are seeing signs of it, but obviously we need more evidence to see the consistency of policy, to see where there's, COVID uptake and, how, the longer term policy will unfold. And, these will have more implication about how longer term we will value, the securities in China. But, if we take, a longer term view for, say, the rest of this year, obviously, outside of US, we see a lot of attractive opportunity, a few factors in play, right? Not just the cheap valuation that we see outside of the US, but also, the strength of US dollar that we have seen in last year might be, easing towards, favoring a lot of the international or even the emerging equities. So that's why we see a lot of the interesting opportunity, not just, outside of US, but, especially when it comes to China, selected part of Asia, these present a lot of the attractive bottom-up opportunity in these areas.
Before we hit the bottom, which industries are worth taking note of?
If you take last year as an indicator, right, both bond market has been, draw down sharply, 15 to 20%. But even so, there could be some asset classes where, from a bottom-up perspective, you can find good opportunity. For example, commodity related, right, energy related. These could do well, like over the course of last year. So if you look at, some of the sector that we favor in the past, right, it could be healthcare, right. It could be, some of the financial sector. Some of these sectors has been, going up a lot, and a lot of the investors, including us, might consider, hey, some of the position might worth consider to be taking profit from and relocating to some of the sectors where valuation are much more reasonable. So these could be, sectors like, some of the technology sector, some of the so-called growth sectors that the market has been very cautious about over the course of last year. So I would say, keep having a value lens, looking for reasonable and good valuation could present investor a lot of opportunity, especially in the U.S. equity market for the course of this year.
You just heard from Stephen Tong speak about the key areas in the financial markets investors should be looking at in 2023. So Peter, as we talked about earlier about the slowing down of the economy from the globe, how would you see the equity market taking this, and how do you expect the TAIEX or other financial sectors to perform amid the rising uncertainties?
Well, the TAIEX itself, and I think even global markets, are not far from fair value. And if you look at them in comparison to the amount of liquidity that's available to, they're pretty much in balance too. The problem is that they've been well above fair value for too long and overly liquid. And so typically there is excess selling that takes place, capitulation selling, and this is what we haven't seen yet. But I don't believe we are far from the bottom, even if that were to take place. It's possible we can get through, and there are many people now who are of the view that we've seen the bottom and that we can start seeing further upside for the rest of the year. Now, again, we are at fair value, and so that's a possible scenario, but it's been unusual. And the reason I say that is because we have seen the sharpest increase in interest rates in history, in policy rates out of the United States. We're seeing the deepest yield curve inversion since the early 1980s as well. And every single time we've seen these sharp spikes in interest rates, and certainly every time we've seen these very deep yield curve inversions, we have every single time seen recessions, and often fairly serious recessions. And so I don't see how we can really get away with that this time. The way the yield curve works basically is it squeezes the capital markets, because capital markets basically borrow short, the short end of the yield curve, and invest long. And if you make it unprofitable to do that, they'll stop investing. And that's still the case right now.
So for the manufacturing sectors, would you see they are going to be hesitate to invest even in Taiwan or to other countries?
They will see it ever more difficult to raise capital to fund their investments. The banks will be concerned about bad debt loans, and they'll be reluctant to lend. And again, they are borrowing short and lending long too. So I think it will slow capital spending, not to mention the fact, again, as Mark and I have both mentioned, that we are seeing situations where there are pockets of excess inventory as well. So they're reducing their inventory spending plans in light of that too.
So Steve mentioned, do you feel that this is a time to invest in bonds instead of stocks, given the bear market that we're facing right now?
Well, yes, in principle. Again, with the inverted yield curve, you're getting a higher yield at the short end of the yield curve. And if indeed we were to see a slowdown in the economy, bonds will improve, will rise. But
and it's a safe option if you see it.
Yeah, but I would still say it's a shorter end of the yield curve even now. But certainly, fixed income over equities is probably a safer place to be for sure.
And you mentioned unprecedented interest rate rises. The Taiwan Minister of Finance, the acting Minister of Finance, mentioned that this crisis won't be as bad as the Lehman crisis of 2008. How do you see that? Do you feel that even though we're going down, but it's not actually as bad, where people will lose jobs and the economy will tank as what we've seen about a decade-ish ago?
Well, in the situation of the Lehman crisis, the heavy debt load was mostly consumers' books and homeowners.
Subprime and
on real estate,
and that created a crash in demand. Right now, the U.S. consumer is, in aggregate, doing okay. But what's interesting is we've seen another sharp rise in consumer credit growth in the United States. And yet still very high deposit levels. This is incongruous in that they haven't spent their money in the bank yet. And what this implies is that that money in the bank is held by a very concentrated group of people, and that the bulk of the consumer is still rather stretched right now. If they have to borrow as much as they have been to continue to consume in a time when interest rates are rising, they could go into some degree of stress over the course of the year too.
How do you see that in Europe, Marco? You've been traveling back and forth.
Well, I think in Europe we have the challenges with previously the high energy costs because of the Ukraine war. And so just I think recently, I think this week, we have seen the wholesale gas prices to reach even the lower level than before the war. So end customer pricing is still higher, right? Because normally you have long-term contracts which are in there, but of course they have driven up the inflation pretty high. So I think Europe was hit the hardest by this, and of course there's also the fear about the recession, right? You know what's happening there. But I think there are some signs, at least on the cost side, which is improving, right? So the war is still going on, which is terrible. And this is something which is kind of unpredictable, how it will continue to drag on, because this is interlinked with a lot of also psychological, right? How things are going in Europe. So I would be also very cautious how this is developing there. So I think Europe has not chosen to raise the interest as high as the USA in order to have like a more soft landing, right? So they try to manage this at the moment, but it's cautious at the moment, I would say.
How about in other parts of Asia, like say, as Peter mentioned, China earlier with its opening up? Do you feel that could improve things? And I know both of you travel extensively throughout Asia. What's the picture there?
Yeah, I think with China is very interesting because from one day to another, right, you go from zero COVID strategy to basically just open up, just open up, right? And so I think they are going right now through the experience what the rest of the world has done 2 years ago, right? And so if you look right now, yeah, it's great, it's opening up, you can travel there, but the problem is the factories cannot function because I know many people there where the factories cannot be operated because nobody is there, they're all sick. So I think there's a delay right now that this wave has to go through, and then I think things will improve, right? So I think, especially thinking about that China still has a majority of the production of the world, I think it is very important to understand that they are coming up to speed and helping to produce the product for the rest of the world. But you also see what Peter mentioned in the beginning, production is also moving out to Vietnam, Malaysia, to other areas where basically let's say not the semiconductor, but also the electronic manufacturing supply chain.
That's driven by the U.S. with the decoupling.
Right. So not only the decoupling, I think there's a few factors, because if you think about even from a risk management perspective, if you think about Fukushima a few years ago, when you have a certain cluster of suppliers only in one region, at that area it was some special epoxy which is used for the industry, and something happens there, it's not good. Every company, every public traded company today, they must basically have a risk assessment and a risk management. And now I think they really have some opportunity to spread supply, to have backup factories and to manage this. So this is normally overall, put geopolitics aside, it's a good thing for the industry to be more stable, to be more safe.
And this expands opportunities for Taiwan.
I would say so, definitely. I mean, look at Taiwan also. I mean, TSMC is also going abroad. Who would have thought about this a few years ago, right? Because the cutting edge technology is still here, but going to the US and now also going to Europe, being more close to the end customers and building up facilities there is definitely also helping Taiwan to engage more with the international community on site, not only from here, but also having outlets to bring this high tech to other regions, Europe and the USA, which are the most important markets for TSMC.
That's what we say. They see the challenge as opportunities to opening up for the new changes. So Peter, we are curious if we could ask about this. Is there any industries that would be surviving or could be relatively unaffected during the period?
There are always winners in every scenario. I think, though, that it will likely be a relatively short but potentially sharp sort of bottom that we hit. I can't think of any particular industry that would benefit from this in the short term, but certainly what we will be seeing, though, will be companies that are more, focusing on the whole supply chain, because once you disaggregate the supply chain to that extent.
Or it could be more flexible, right?
Right, it'll be more flexible, but again, I think this is where the Taiwanese companies have, again, benefited from the fact that originally they were the ones who put the facilities into China and controlled it there. They are now pulling them out and disaggregating them, and they become even more important in managing that more, that more disparate supply chain that they have to control in order to get the goods to where they need to go.
But how about the foreign investors investing strategy change? Do you see any difference, or do you foresee anything in the future?
Well, again, we look more at the sort of broader flows, and certainly since really early last year, there's been a considerable amount of outflow out of Taiwan, but I think that's true of the emerging markets more broadly, and certainly in the latter part of the, throughout the year, markets in general. And so given that and the fact that we have seen typically the emerging markets tend to do well at the very bottoms of these sell-offs, in other words, in the early stages of the recovery, again, we could see that flow back into Taiwan coming rather quickly in the second half of the year.
Okay. Great. So we'll come back to talk about more of the chip industry in Taiwan. And we just spoke about how Chinese financial markets will likely fare in 2023, the year of the rabbit. Coming up next, we'll be hearing from Alex Capri, research fellow at the Headwinds Foundation, renowned global chip supply chain expert, on the global semiconductor industry outlook.
Let's now hear from Alex Capri, research fellow at the Headwinds Foundation, who is also a World Economic Forum agenda contributor. Alex is an expert on supply chains, trade, and global governance. He is based in both Singapore and the United States. He spoke to me about the opportunities as well as challenges in the chip industry and key areas we could see potential growth in. Let's take a look.
There's been so much talk about leading edge, really super hyper advanced semiconductor manufacturing, obviously because it's important for defense purposes. We're talking 5 nanometer, 3 nanometer, 2 nanometer, the stuff that is just incomprehensibly complex and hard to do, but incredibly powerful. So there's that focus will continue for defense related purposes. And we will see that part of the sector get a lot of money thrown at it. And again, I acknowledge that, it's going to be costly. It's going to be, there's going to be bumps, and it's going to be somewhat difficult and inefficient to do in the short term. But I do believe that it will come to fruition.
What sectors in the chip industry do you see being booming or growing?
The real interesting and potentially lucrative, again, mid to long term area in semiconductors are specialized chips for power, for logic, for memory, and so on, that will be integral to the medical field, for example, an evolving field of medicine, to electric vehicles and autonomous vehicles, to communications and the Internet of Things and smart cities. These are all highly evolving areas that have huge economic potential, and this is where I think we're going to see the emergence of new partnerships. And here, what we're going to see is automotive companies and some of these other types of companies that I just mentioned partnering up and actually becoming more and more like a technology company. They're going to look more and more like technology companies. And that means that semiconductor companies are kind of going to they'll go the other way. And so as they partner up with all of these specialized sectors, they will be semiconductor companies, but they will sort of tilt to all these specific industries. And we've seen that happen already with Huawei in China. As U.S. sanctions really crippled its 5G business and its smartphone business, what they've done is they've turned to the automotive sector. And they're working closely with the big electric vehicle companies.
Do you see TSMC becoming or working in towards that direction?
Absolutely. That's got to be a key area that TSMC is going to be looking at for sure.
You just heard from Alex Capri speak to Rath about the key areas in the semiconductor industry, Taiwan's top export. So we can expect growth and for the coming years. So Marco, the question goes to you. How would you expect the foreign investor interest on the industry, let's say semiconductor industry in Taiwan still for the future?
I think there's high interest, right? Because if you have a technology which you can apply in semiconductor industry, you should come to Taiwan.
Right.
I brought by myself companies here where I work together specifically in the semiconductor area. So these are European companies. They come to Taiwan. It's a huge market here, not only because of TSMC. You have other companies, UMC, Vanguard, Nanya, Winbond. You have a lot of fabs here. And you have a lot of design houses, back-end, OSE, ASE, KYC. So there's a lot of companies here who basically need technology. So if a company is providing, let's say, like a hardware or software, Taiwan is a good place to invest because it's the heart of the semiconductor worldwide.
But given the rising geopolitical risk, how would you see the potential concern or challenge for these investors?
Well, first you need to see today we have a revenue in the semiconductor industry of around about 600 billion US dollar.
Yeah.
So it's predicted by the end of the decade or in the beginning of the next decade, we will reach 1 trillion US dollar. Despite the fact that we are thinking it goes this year 3% down, that's a huge growth, huge growth. So there's a lot of fabs which are built internationally, but also here in Taiwan. So we are talking about a market which is growing above average other markets. So there's a high demand. There's a high demand for equipment. There's a high demand for manufacturing, for skilled workers, for skilled labor. That's, I personally believe, is one of the biggest challenges, to find good, talented people who can help with this growth. So I would say that that in this industry, this industry is very vital, has a lot of opportunities, and there are more and more companies coming in. And I think, as also mentioned before, the specialized chips, which are used in data center, high performance computing. So they are from a, let's say, an IP company like ARM or RISC-V. So these are basically companies who offer kind of a platform to design chips and then manufacture at a foundry like TSMC. This is very, very strong growing.
I think Marco mentioned a really good point in terms of talent. Peter, working with foreign investors coming into Taiwan and also foreign talent, what do you feel attracts these talents to come in? Do you feel there's something that's still deficient in Taiwan's system in attracting foreign talent?
Well, certainly most foreigners who live here in Taiwan are extremely happy here, and they're probably
I can see Marco agrees with
Yes,
you.
absolutely. I'm not leaving, I stay here.
If you look at all these surveys that are posted from time to time for all expatriates around the world, Taiwan typically ranks in the top 3. And one of the factors that are most commonly pointed to is the health care here. The quality, the availability, and the pricing of the services are unprecedented. But it's also a wonderful place to do business, that you have, again, depending on the industry you're in, of course, so much access to the international market through the export sort of machine that we have operating here. And again, as Marco said, the semiconductor industry is so broad and so advanced that, again, there are many services that can be provided in this high-growing sector.
In terms of the government, do you feel there's enough that's being done to bring in talent for the semiconductor industry? Do you feel like, say, benefits or immigration, or we've seen tax refunds, but a lot of them actually can't be given to foreign workers or foreign talent that is coming in? Do you feel that needs to change?
Tax is a commonly mentioned issue of concern. Certainly Taiwan taxes are higher than in, say, other financial centers like Hong Kong and Singapore, but Taiwan is not competing as a financial center. And certainly Taiwan taxes are comparable to most European and American tax rates as well. So you're not getting taxed any more than you would if you weren't here. There are some issues about rebates on withholding taxes that are for those who are here only for part-time of the year. If you're here for a full-time, as a full-time employee, though, you don't have any tax disadvantage, though. Yeah, I mean, taxes are always something that could be relaxed and has been brought up, but I don't think we necessarily need to go there. Taiwan needs to have its own revenue stream as well. Other issues, though, I think in improving air quality would go far. That's been an issue and a common complaint. Traffic conditions have actually improved considerably over the years that I've been here. So I wouldn't think that beyond that there is much we need to focus on.
I wanted to go back to the semiconductor industry, and as Alex mentioned earlier, he talked about how the industry and foundries will be working with, say, car makers in terms of EV or in terms of biotech with medical firms. How do you see that going forward in terms of Taiwanese semiconductor companies here?
Yeah, I would say, I mean, at the moment, TSMC revenue with automotive is only 5%. But I believe that this will be probably one of the biggest growth area for TSMC, right? If you look at this, I think this was also one of the decision drivers behind why they go to Europe, why they go to Germany, because there are several companies who ask basically also TSMC, or who have publicly announced that they would like to utilize the foundry services of TSMC. Now, they are not building a cutting-edge technology fab there. They probably build 20 nanometer, 28 nanometer fab. This is the plan, which is used in automotive. But it helps for companies like NXP, Bosch, ST, probably to also have some production at this foundry. Because I'm sure TSMC does a pretty strict due diligence, not only government subsidies, money. They must have customers aligned, which will fill the fab. That's the culture of TSMC, how they would do this. And so they will help the automotive industry with the more chips, the quantity of chips is exponentially what is going in, not only in electric cars, but in all type of cars. Electronics is getting more, you have more controlling units there, more memory in there, and there's basically TSMC who is able to help these fabless IC design houses or hybrid manufacturers to give them manufacturing capacity, because this is where TSMC is the best in manufacturing semiconductor.
You know, what we've seen historically is that when large-scale products, which were selling the tens of billions, if not hundreds of billions of dollars a year globally, go from sort of an analog to a digital format, such as the or from a disaggregated to a common platform, such as PCs originally, when they were all separate brands and then became a common operating system, or phones when they went from analog to digital. This is when we saw a massive adjustment of manufacturing to outsource, mostly to Taiwanese companies. And I think that the automobile is going to be another example of that, where you have individual companies that are building their own engines when it's still in the internal combustion stage. As we go into EV, there's no reason for everyone to make their own EV car, particularly if pricing becomes a factor. It certainly will be if they're so similar in design. And so there will be this flow of outsourced orders, I think, coming to Taiwan, benefiting the semiconductor industry, but the electronics industry, subsystems, and maybe even the new emerging auto industry here as well.